All right, good evening. Let's do a end of day review for today. Today is Monday, August 14, 2023. And it's the first training day of this week. This week we don't have high impact news. We're a little bit on Thursday. On Wednesday we have a FOMC minute release. That may have some. We may expect some volatility right there. Volatility right there. Other than that, I think it will be a quiet week. So let's see. But today is Monday, right? The market will give us some hint right here. If you look at the move, so if we want to catch a big move of the day, then I think the big move is right around here at 40, 49 or 47 right there. And you see it will catch there, and you see the huge move we make is about $2. Almost $3 right there for us. All right, let's review some of the practice trade we took today. We didn't do any real trade on Monday or Tuesday or Wednesday for that matter. We only do trade on Thursday and Friday, and we try to keep our rule that way for now. And also we only do one trade per week. Sometimes we try to make the exception for that rule, one trade per week. I think on the week before that, I make assumption when we make the first trade is break even, so we just say we make the second trade. And for last week, I did make two trades. One trade is a lost trade 40 cents. Early entry. I have very strong conviction that it's gonna be long, but I going a little bit too early. Then I take the second trade, and it turned out like a good profit right there. It's $1.30. So we ended up in the week green right there. So basically, I make two exceptions right there. But right now, we just try to keep the rule intact like that. One trade per week, because I think that's the critical for it to follow our rule. And also we try to manage our emotion, right? At a beginner, we have a lot of so-called fear of missing out. That's the most fatal emotion that almost sabotage our trading career right now. So we have to be thoughtful, how we gonna manage our emotion right there. That's why we want to keep it low by not engage much just once a week. The rest of our time is help us to learn about the liquidity run, the markets, the price actions that will help us to build for long term. Because we're not in this for short term, we're in it for 10 years. That's our plan. But anyway, to look at the trade that we are trying to do right here. We entry at 45, a candle 45 on 5-minute time frame. We go long, and the reason you go long because we have a sell seller we were taken, right? You have sell seller there, and then it hit into the order block for us right there, and we target it just right here, new week opening up. That's a very conservative target right there. Another target for that is gonna be take the London high right there, and we have a very good risk reward ratio right there. Let's see on the 1-minute time frame. Okay, so that's the 5-minute time frame. But on 1 minute time frame, I remember we did going at 9:34. The reason for us is, you know, it hit this auto lock at the same time. You say auto block right here and the retest. So we thought they're gonna go in right here. However, it turned out this is a little bit too early. We have to wait another 20 minutes or so, right? On it's 45, and yeah, we have to wait about 11 minutes. But actually, if you go to the 1 minute, the 45, the 45, 9:45 is on the 5 minute time frame, but actually on the 1 minute it go at 48. So that means we go in at 34. We have to wait another 14 minutes, a little bit too late right there. That's the reason why I put, you know, the better entry is 45 on 1 and 48 instead of 34. So entry initial, right? Initial oh 9:34. So at the beginner, like I mentioned, we have a lot of fear mixing out. That's why you always refer to practice, so we can see how our first, you know, emotion, how it manifests itself. So in this case, we can learn that it manifests out early entry, right? That's why we practice. We practice so we can improve. So if we go in here, we see much better setup, right? It also tests into this auto block. But the beautiful right here is if we wait right here, we see its cell liquidity will also taken. When we go in right here at 34, it also cell liquidation, but this not take out this guy, yes. But if we wait a little bit, it also take out a cell side from this guy. So it's a stronger case for it right there if we go to a 48. Or even better, we can go in at 50. Wow, you see the 50? 50 is a good entry, and the time interest for it right there, go at 50s. Because we can put our entry here and stop loss just below there. Best entry. So the best entry at 50, right, or also at here, you see that? It a retest 50 or 56. See right there, auto block, fair value gap, you see the fair value gap right there, and a retest. You can trick this, is an auto block, also whole thing right auto block, and a retest in here. In this fair value gap right here, but it not touch fair value gap, it's a retest auto block right there. So that's 56 or here 50. So right here we could say that alternative entry is 50, right? If you want to go at a time of interest with 50 or 956, right? That's 56. The retest right there. The best is the retest on fair order block M1. Okay. Let's make some note right here. Make some note right here, 50. See that? $50.09.50 and it's to the left, not to the right. So the check to the left, yeah. It's the same setup, right? Order block, fair value graph, retest, M5 setup, right? And here's a long setup, entry time 0950 or 0956. The more practice this, the better we're gonna become to recognize this in real time. And I think when we entry at this, it gives us so then in this case, you see that it did take, move here, it did take the, okay. So you know that when you enter at 48, what do you see? You see that the sell side liquidity here, it trapped. So we know that it's gonna go take that side. So right here, when we go in right here, it gives us a better property that it will give us a better option, better position, because we know for sure it will go in and take out this buy side liquidity. You see, sell side liquidity taken. Before that, before the sell side liquidity is a buy side liquidity trap. I can give you the high probability right there. That's a signature for it to go long. Right? It's a buy side liquidity trap. So we have a buy side liquidity trap first, right? And then you have a sell side liquidity second. Better than, even better if you have a long wick, right? That's the signature for go long right there. So you clear, right? Right here you have buy side liquidity, sell side, buy side liquidity trap. Basically it make a lower low, so it trap the people who short right here, Then it go down, it take the sell side liquidity. As soon as it takes a recovery, it's not going to go down because it has a wick right there, it's rejection. So the move right here, it's just liquidity graph. It's not market structure shift at all. It just try to grab the liquidity before it goes to the other direction. So when we go in here, it gives us a better, much better position, because we know for sure that it's gonna go and take the buy side liquidity because it just set a trap, take it. That means when we go in there here, we will have our trade always in the money. We always in the control seat right there. We only in driver's seat, so we can move our stop loss to break even. Then you have, you know, your trade is free trade there. So you from break even to a bigger win up there. That's the point that we try to emphasize right here. And as soon as you see that it move, it take the sell side liquidity, you thought that it's gonna be, you know, going down, right? Because also the setup for short right there. It did not. It did a failure swing low right there. Then you know that it might make another low high, then you know that it's gonna be moving up right there. Man, that's beautiful setup right there. You see the logic right there, and you see the big order block and the big fellow gap overlap right there. I think may not be a unicorn setup, but it's a very high setup right there. The unicorn setup that ICC mentioned, I think it has something to do with the breaker block. It's not order block. Yeah, wow, that's a good setup right there. So it's sweep liquidity of both sides, both ends of this right there. First, it take a sell side, but before it take the sell side, it set a buy side liquidity trap, and then take a sell side, go boom, take the buy side, and then go down, and then boom, go. You see, set a lot of sell side liquidity trap, and then boom, it's moving up, and then it running. It hit the right here, the order block, and then you see that it sell side, buy side, and then boom, go again. The same, you know, the same move right here, right? Sell side, boom, sell buy side, and then pull back, boom, go up, right there. Okay, that's the first trade. And if we let it run up all the way up to where? Up to here, and we can have a $2 move right there. So basically, the risk reward for this trade is huge. How much we risk? Yes, we put entry right here. We risk right here. We only risk about 14 cents. Look at that. 14 cents, and how much we gain? $2.97 something. Right here. $2.90. Come on. It's almost 10 to 1 to 18 ratio right there. Man, what a setup. So Monday is the huge move. We can see that because on look at 4-hour time frame we can see, but that's let's review on the trade that we practice. And I think this trade also the same concept, but no, a little bit because it's based on the breaker block, so it's more reliable, right? Because the breaker block is just trend follower, right? go with the trend setup. The order block is so-called go against the trend. So it's the probability is lower than this setup. So let's see. So we have the idea. Oh, right here on a 5-minute time frame, you see how beautiful this play out. You see this bullish breaker, right? And it take the buy side liquidity right here, right? And then people want who short say, oh yeah, buy side resistance gonna short them. So it trapped the people right here, and look at that, it go in, it takes sell side liquidity. All the people buy in here, we were knocked down, but as soon as it touched this barrier breaker, it boom, it bounce back. So the subset called breaker, in this case bullish breaker followed up retest, buy side liquidity taken first up here, and then side were taken, and the time entry is 10:20 on Monday. The target is London high right there. So we have to take into the consideration, right? If around 10:30 or so we see a bearish breaker, and then we see a fellow gap and a retest, then we can know for sure that we're gonna go long. Remember that, the time, right? So let's see, retest anytime right here. So when seeing this setup, which is barrier breaker, bullet breaker, and fellow gap, when seeing this setup forming and the retest taking place around 10:30, then it is a high probability setup. Right, and now let's look at this. Hold on. Yeah, this is 1 minute time frame. Right? Let's look at the 5-minute time frame. What we see. Oh yeah, 5-minute time frame. It confluent with the DR model right there. You see the DR model, right? It go here. It makes you look like it rejects it, but actually it pull back in here around the mid range, and then it's go bump into the 0.5 standard deviation right there. Yeah, you look carefully, you see right here. Can give you the idea that it's gonna go long. It's gonna be low of the day, because it tests couple of time and it never close below the implied DR low right there. Give you an idea. Okay. So basically on the 5-minute time frame, it confluent with the DR model in the bullish direction, where the DR implied DR low is if validated or or not, but not violated, right? How many times? 4 times. That a very strong way there. You see that? 1, 2, 3, 4. 4 times. It tried to break down, but it fell. So got give it a very good, bullish buy right there. That's a beautiful trade. So if we make the entry around here, we still have a good entry right there. Well, that 2 good trade long for today right there for us, right? Let's see what is the volume for today. So I want to write out some volume real quick for today. Another thing we can take a look at why it go bullish, it go reversal right here, because you see that the smart money diversion right here is so clear, right? This is the low of prior day low. It private it off right here, but you see the QQQ, it make the equal low. Right here we took at equal because the difference only 1 cent. You see the low is 69 cents and the low of this guy is 68, right? No, 70. So it's just 1 cent difference. So we can take equal low right there, and we can use that to detect the long, the reversal up right there. That can give us a very good idea right there why we need to go long. So smart money diversion, right? So I think at 9:30. Yeah, right here. It's candle 9:30 right here. Or 9:30. Basically, the QQQ making what I call equal versus the SPY making higher low. Yeah, equal is higher low. Higher low. And it's not high low right there. So it's a bullish setup right there. Yeah, so we can add this node into that our 2 trade right here. Right. Smart money diversion at 09:30, 30 and not 35. That gives us a reason to go long. Okay, let's see. We are almost run out of time, so let's I want to look at the 4-hour time frame real quick. Right, you see let's remove this. Okay, pay attention to this candle. It's very critical, this candle, right? So this candle, the 9 o'clock candle on Monday, is set the tone for the week. You see last week, the 9 o'clock candle is not really big. You see right there? Yeah. And then the setup is go down. And the next day you see the Tuesday open way below this. So tomorrow, if it remains bullish, we want it to stay above this level, open above the level. Right there. Where is the new week open? Here. Yeah, that's our anticipate right there. But look at this picture, it's so beautiful. It's like it's perfect. It's like a perfect drawing. But today we have not today, I mean on Friday we have a sell-side we were taken. Not a sell-side agreement. And right here, when you see right here, it make a what? A higher low, right? Even though this one is, it take the buy-side liquidity, right? So the logic is gonna be take a sell-side liquidity, but it failed to make it, so it failed to swing low right here. Then you know that it's gonna go up. All right, anyway, that's good for now, and thank you. Talk to you later. Bye for now.